In a pivotal moment for the cryptocurrency landscape, recent developments in U.S. regulatory attitudes have sparked discussions about the future of digital assets. As Bitcoin's price remains largely unaffected by these shifts, experts are contemplating the potential for a flywheel effect that could eventually drive significant changes in the market dynamics. On April 25, 2025, SEC Chair Paul Atkins hosted a critical roundtable discussion in Washington, D.C. aimed at addressing the pressing issues surrounding cryptocurrency regulations. This event marks a notable shift in the SEC's approach, particularly following the agency's recent decision to drop a long-standing lawsuit against Ripple, which had symbolized the contentious relationship between regulators and the crypto industry. During the roundtable, Atkins highlighted that innovation in the crypto industry has been stifled for the last several years, emphasizing the need for a more adaptive regulatory framework. The roundtable featured prominent voices from the industry, including executives from major firms such as Fidelity Digital Assets and Kraken. They gathered to discuss the complexities of cryptocurrency custody, essentially how digital assets are stored and safeguarded. As self-custody solutions become increasingly popular, the lack of clear regulatory guidelines has raised challenges for both investors and institutions looking to offer compliant custody services. A regulatory approach should recognize the differences across qualified custodians, SEC Commissioner Hester Pierce stated, underscoring the necessity for regulations that align with the unique characteristics of digital assets. Atkins' remarks come amidst a broader trend where the Trump administration has taken steps to create a more favorable environment for cryptocurrencies. This includes an executive order to establish a strategic Bitcoin reserve and pardoning key figures in the crypto space. The SEC's recent rescindment of Staff Accounting Bulletin 121, a rule that treated crypto holdings as liabilities for banks, has further signaled a shift toward more accommodating policies, which many in the industry have welcomed. Despite these advancements, tensions persist. The need for investor protections must be balanced with the practical realities of securing decentralized assets. As Pierce noted, if we fail to grapple with these issues, we prevent regulated entities from serving their customers. This reflects the ongoing struggle regulators face in crafting rules that protect investors without stifling innovation. As discussions around regulatory frameworks continue, the crypto market remains vigilant. While Bitcoin's price has not yet responded dramatically to these developments, analysts suggest that a flywheel effect could emerge where initial regulatory changes lead to increased investments and ultimately significant price movements. The industry's resilience and adaptability will be crucial as it navigates this evolving landscape. Looking ahead, all eyes will be on the SEC and Congress as they work to reshape the regulatory environment. With the crypto industry having played a pivotal role in political campaigns and economic discussions, the possibility of a more collaborative regulatory framework could usher in a new era of innovation and growth for digital assets. As the dialogue between regulators and the industry progresses, the implications for investors and the broader market will be profound. In a week marked by significant fluctuations within the cryptocurrency market, Bitcoin has emerged as a focal point, soaring past the $95,000 threshold amid renewed institutional interest and substantial inflows into exchange-traded funds ETFs. This surge, which represents a remarkable 11% increase since the beginning of the week, positions Bitcoin for its most robust weekly gain since the aftermath of the 2024 U.S. presidential election. As the market recalibrates following early April's downturn, analysts are closely monitoring potential upward trajectories, with some forecasting Bitcoin could reach as high as $130,000 by the end of 2025. On April 25, Bitcoin's price hovered around $95,000, reflecting a 1.8% increase from the previous day. Ethereum ETH also saw gains, trading just above $1.800. This resurgence in cryptocurrency prices has been bolstered by an impressive $2.68 billion in net inflows into U.S.-listed spot Bitcoin ETFs this week alone, a figure not seen since December 2024. The confluence of these factors has led many experts to declare that Bitcoin is experiencing a critical decoupling from traditional macroeconomic assets, a shift that may signal its maturation as a reliable store of value. David Duong, global head of research at Coinbase Institutional, articulated this sentiment, noting, "This week's decoupling of Bitcoin's performance from that of traditional macro assets may be as close as we come to such a moment." He emphasized that Bitcoin is increasingly perceived by both institutional and retail investors as a hedge against broader economic uncertainties. This shift has been further exemplified by companies adopting Bitcoin for their corporate treasuries, following in the footsteps of prominent entities like MicroStrategy. Despite the optimism surrounding Bitcoin's price rally, some analysts advise caution. The Crypto Fear and Greed Index, a gauge of market sentiment, has dipped from a score of 72 on April 23 to 60 by April 25, indicating a potential cooling in bullish sentiment. Moreover, there are concerns about the sustainability of the current rally, with predictions suggesting a possible pullback to around $87,000 before any further upward movement. Meanwhile, the broader altcoin market is also showing signs of potential growth contingent on Bitcoin's ability to maintain its current momentum. Cryptocurrencies such as XRP and Cardano have demonstrated resilience, with XRP trading near critical resistance levels and Cardano showing bullish patterns following a recent upward trend. In a contrasting stance, the chairman of the Swiss National Bank recently dismissed the idea of Bitcoin being a viable reserve asset, highlighting the ongoing debate regarding the legitimacy and stability of cryptocurrencies in traditional financial systems. Such skepticism from established financial institutions could temper some of the exuberance seen in the market. As investors and analysts reflect on these developments, the coming weeks will be crucial in determining whether Bitcoin can sustain its upward trajectory or if it will face significant resistance. The potential for new record prices remains a tantalizing prospect, though tempered by the volatile nature of the cryptocurrency market. As institutional interest continues to grow, the dynamics of price movements in Bitcoin and other cryptocurrencies will undoubtedly remain a key area of focus for market participants in the months ahead. In the ever-evolving world of cryptocurrency, few events have stirred as much controversy as the recent announcement surrounding President Donald Trump's Dollar Trump meme coin, in a bid to boost engagement and investment. The president revealed plans for a private dinner with the top 220 holders of the token, an initiative that has not only sent the coin's value soaring but also ignited fierce criticism from political opponents and calls for an ethics investigation. The Dollar Trump token, which was launched shortly before Trump's inauguration in January 2025, has seen a remarkable resurgence in popularity, particularly following the dinner announcement on April 23. Within a mere 2 days, trading activity generated nearly $900,000 in fees for Trump and his associates, and the coin's value surged by more than 50%, achieving a market capitalization of approximately $2.7 billion. This spike came as the website for the coin prominently advertised the exclusive event, promising attendees not just a dinner but also a VIP tour of the White House the following day. Critics have been quick to label the dinner contest as a blatant attempt to monetize presidential access, suggesting that Trump is effectively selling his influence to those who can afford it. Senator Chris Murphy, a vocal critic of Trump, described the promotion as the most brazenly corrupt thing a president has ever done. Senators Elizabeth Warren and Adam Schiff have also called for an investigation by the U.S. Office of Government Ethics, questioning whether this constitutes pay-to-play corruption, where access to the presidency is bartered in exchange for financial investments in Trump-affiliated ventures. The mechanics of the Dollar Trump token itself further complicate matters. Approximately 80% of the token supply is controlled by the Trump Organization and its affiliates, raising alarms about potential conflicts of interest and the likelihood of future market instability. Since its launch, the token has reportedly generated upwards of $350 million in trading fees, with a significant portion flowing back to wallets associated with Trump's ventures. Experts in ethics and cryptocurrency have weighed in on the implications of this arrangement. Delaney Marsko, director of ethics at the Campaign Legal Center, pointed out that while the president is not legally barred from profiting from such ventures, the arrangement undermines decades of ethical norms that past presidents have adhered to. The fact that he is not barred by the law from having these financial interests allows him to engage in a lot of seemingly corrupt activity, Marsko noted. Adding another layer of intrigue, the Dollar Trump token is not merely a digital asset but also part of a broader digital strategy by the Trump family, which includes plans for a stablecoin and ventures in decentralized finance. This pivot towards cryptocurrency comes after a notable shift in Trump's stance on digital assets during his 2024 campaign, where he positioned himself as a champion of innovation in the sector. While the immediate future of the Dollar Trump coin may be buoyed by the anticipation of the gala dinner, the long-term sustainability of the token remains uncertain. Analysts caution that the upcoming unlocking of additional tokens in July could lead to increased market volatility, particularly if the speculative interest that has driven recent price increases begins to wane post-event. As the situation unfolds, the intersection of cryptocurrency and politics continues to raise pressing ethical questions, spotlighting the need for clarity and accountability in how financial interests are managed at the highest levels of government. With ongoing scrutiny and potential investigations looming, the implications of Trump's meme coin venture are likely to resonate beyond the crypto community, shaping discussions about ethics and governance in the digital age. In the ever-evolving landscape of cryptocurrency, recent developments have captured the attention of traders and investors alike. Bitcoin BTC has surged past the $95,000 threshold, signaling a potential rally towards the psychologically significant $100,000 mark. This price movement is underscored by a notable resurgence in institutional demand, as highlighted by data from Farsight investors indicating increased inflows into U.S. spot Bitcoin exchange-traded funds since April 21. John D'Agostino, Coinbase head of institutional strategy, remarked in a recent CNBC interview that major institutions have begun purchasing Bitcoin to hedge against inflation and economic uncertainty, drawing a parallel to gold and its protective characteristics. However, not all analysts are convinced that this bullish trend is sustainable. The Crypto Fear and Greed Index, which measures market sentiment, has dipped from 72 to 60 in the span of just 2 days, raising concerns about a possible pullback. Some experts predict that Bitcoin could retrace to around $87,000 if bullish momentum falters. As Bitcoin stabilizes, the performance of altcoins such as Ethereum, ETH, XRP, and Solana SOL becomes increasingly contingent on Bitcoin's ability to maintain its current levels. Ethereum, currently trading at approximately $1,795, is facing resistance at its 50-day simple moving average SMA of $1,812. Despite these hurdles, the bulls have managed to keep prices above the 20-day exponential moving average EMA of $1,696, which suggests a slight bullish edge. Analysts speculate that if Ethereum can breach the $2,111 resistance level, it could soar to $2,550. However, any decline below the 20-day EMA might lead to a drop towards $1,537. XRP is also in a critical position, trading near its 50-day SMA of $2.18, where it has met strong selling pressure. Yet the bulls have shown resilience, maintaining prices above the 20-day EMA of $2.13. A break above the current resistance could propel XRP to $3, while a drop below $2 would signify a shift in momentum toward the bears. The altcoin market is buzzing with activity, particularly with the recent listing of Inetia in it on Binance, which has seen its price soar over 40% following the announcement. The Layer 1 blockchain aims to streamline appchain development, allowing developers to focus on building applications rather than navigating complex rollup infrastructures. This enthusiasm illustrates the market's appetite for innovative solutions amidst the ongoing evolution of blockchain technology. In a notable institutional move, Fidelity has reportedly acquired $35.9 million worth of Ethereum, further indicating growing confidence in the asset's long-term performance. This acquisition has already triggered a positive market reaction, with Ethereum's price rising significantly in response. Following the announcement, ETH experienced a surge from $3,150 to over $3,280 within hours, alongside a dramatic spike in trading volume. Moreover, long-term Ethereum holders are quietly accumulating the asset, with over 640,000 ETH transferred into wallets that have never sold in just 48 hours, marking the largest inflow since 2018. This trend could signal a stronger bullish sentiment, as analysts suggest that Ethereum may break out from its current patterns, potentially reaching targets of $6,000 to $8,000 if momentum continues. With the cryptocurrency market displaying both optimism and caution, traders and investors are advised to monitor key resistance and support levels closely. The coming weeks will be critical, as the interplay between Bitcoin's performance and altcoin developments could dictate the overall market trajectory. As institutional interest in cryptocurrencies grows, the stage is set for potential breakthroughs and volatility alike, making it an exciting time for participants in the digital asset space. This week has witnessed a notable resurgence in the altcoin market, with significant gains for cryptocurrencies such as Solana, Cardano, and Sway. As investors return to the crypto space following a tumultuous period marked by sell-offs earlier this month. The standout performer was Sway Crypto, SUI, which surged by an impressive 68.4%, fueled by increased user activity and growing confidence in its underlying technology. Meanwhile, Solana Crypto, SOL, and Cardano Crypto, ADA, also saw substantial gains of 13% and 14.8% respectively, while Avalanche Crypto, AVAX, rose by 17.6%. Several macroeconomic factors have influenced this shift in market sentiment. The recent volatility in cryptocurrency values can largely be attributed to the economic implications of trade tariffs announced by former President Donald Trump. Initially, these tariffs caused a sharp decline in markets due to fears of their impact on global trade. However, the tone from the White House has softened recently, with reports of exemptions and ongoing discussions with various countries. Investors interpreted these developments as a positive signal, prompting a resurgence in interest toward riskier assets, including growth and tech stocks that often correlate with cryptocurrency performance. Sway's remarkable growth can be attributed to its robust network activity, which is a key indicator of a blockchain's health and value. In March, Sway's decentralized exchange volume soared to $3.2 billion, and the total value locked in exchanges reached $2.5 billion. Furthermore, stablecoins on the platform achieved new highs of $879 million, marking an 82% increase from the previous year. These metrics suggest a strong demand for Sway's services and highlight its potential as a viable player in the increasingly competitive blockchain landscape. Solana too is making headlines, particularly with its innovative partnerships. This week, the project Helium, which operates a community-led wireless distribution network, announced a significant collaboration with AT&T. This partnership not only enhances Helium's operational capabilities but also symbolizes the growing intersection of telecommunications and blockchain technology, an area expected to drive further innovation. Other altcoins like Avalanche and Cardano are also gaining traction, with Avalanche's Axiom surpassing $132 million in volume on its cross-border payment platform. Cardano's founder recently announced that its Lace wallet would support the widely used token XRP, which may further enhance its ecosystem's utility. Despite these positive trends, market analysts warn that the crypto landscape remains volatile. The current uptick in altcoin values is closely linked to a broader movement toward riskier investments. For sustained growth, it will be crucial to monitor on-chain user activity and the number of businesses developing on these platforms. Without consistent engagement and innovation, the value of these cryptocurrencies may eventually decline. As we look ahead, the developments within these leading altcoins suggest a promising trajectory for the cryptocurrency market. Should the trend of increased user engagement and innovative partnerships continue, we may witness a sustained recovery and growth phase for altcoins. Investors will be keenly watching how these dynamics evolve, particularly in light of potential regulatory changes and economic factors that could influence market conditions in the months to come.